Hey everybody, I decided today was time to do another morning game plan review where I'm going to take a look at the stocks we discussed in the morning meeting and see how they played out. So why don't we get started? For those of you who haven't seen one of these before and don't understand our morning meeting, it's called Stocks in Play. The focus of the meeting is short-term equity trading, U.S. markets, intraday. We begin the meeting by quickly going over the big picture. Admittedly, we don't spend much time on that lately because the big picture has been pretty stable for the last couple of months, just a slow grind higher. After big picture, we move right along to stocks that we believe have fresh news catalysts for the day and are going to be in play, therefore offer better risk to reward trading plays on the open. After we go over these fresh news plays, then we go to second day plays, technical setups, other trading ideas. There is collaboration on the desk. All of the traders input their top 2 or 3 ideas, whether they're technical plays or fresh idea plays. Before the meeting, I scan those and usually take a few of those ideas and combine them with my own, and that is our morning meeting. So why don't we get started? And we'll just kind of work our way down the list here. Maybe do 4 or 5 of these fresh news and maybe 1 or 2 technicals. So why don't we get started with GRMN, Garmin. Support level pre-market was 49, resistance 50.30. So let's zoom in on that, see what that looks like. Oops, that's GRMN. Okay. So here's today's price action. And what we were looking at in the pre-market was this large gap up. We had seen it already established some support here at 49. Pre-market's resistance, you can see we kind of established there right around 50.30. And as we were coming into the open, it was a little bit of a mini downtrend, but nevertheless it was a big gap to the upside with a pretty nice size short interest. So my first instinct was to trade it on the long side here above 49, look for a break above this downtrend line, and look for maybe to take out the pre-market highs. And that's kind of how I traded it when the market first opened. We'll zoom into that price action, kind of see what that looked like. And was looking to buy here at this 49, and that was working okay. But then we noticed that it was starting to actually have trouble here at this 49.30 area. I'll move this line over a little bit. And eventually had this hard down move here to 48.50, which got me to focus more trading on the short side, and traded short against this 49 right here, and eventually was stopped out into this move, and unfortunately I was done trading for the morning. And you can see it wasn't really a particularly good stock the rest of the day. I think did offer a couple of chances to short it. I know my mentee mentioned to me that he finally shorted it in this area right here when he saw a seller, and he caught this move to 48.50 and ran with whatever he could take. But overall not particularly clean, so it wasn't one of the better stocks discussed in the morning meeting. Why don't we move on to the second one, which is MOS. And MOS, the notes here are support 58 longer term, 59 pre-market, 59.50 pre-market resistance. Very, very positive reaction to litigation settlement. Was bought ahead of the announcement as well yesterday. Looking at long and break above 59.50 or short if holding below 59. So let's kind of see how that price action played out in MOS. And remember, when we're formulating these ideas and plans about levels to be long above or short below in the pre-market, doing it becomes more valid based on the amount of volume that we're seeing in the pre-market. And the way that I can kind of judge the volume is on my platform shows me pre-market action, but also I have the SMB scanner, which basically this is the tool I use for my pre-market research, has all my relevant information, and in the case of MOS, was gapping up this morning. Where is it on our list here? Why is it not on here anymore? Just want to kind of show you what that looks like. Maybe because it's not sure why it's not showing up here. A lot of stuff shows up during the day, intraday. Actually, I can probably do it easier this way just by doing a search for it. So here it is right here, MOS. And in the pre-market, I look at this volume rate. It was pretty inflated. I did more than 200% of its normal volume, but in the pre-market, if I see something above, let's say 10% of its daily volume in the pre-market already, that lets me know that my levels I'm looking at are going to have a better chance of being valid. So anyway, so what we saw in the pre-market was if it was above this 59.5 level here, look to trade it on the long side, and with a hold below 59, look to trade it on the short side. So we kind of see how that played out. In the pre-market, was above that 59.5 level. Right on the open, drove down to 59, and went through there, and eventually, I traded this on the short side. You can see I can kind of show you where that was right here. We can see it got clearly below 59, and as I mentioned in the game plan, if it was holding below 59, I wanted to short it. It came back up. You can see it's holding below 59 here. Kind of zoom in a little bit more so you can see that. And that's what got me short. Let me just zoom in a little bit right here. So we can see it was in this downtrend, got below my key inflection point 59, made a new low here down at 58.60s, spiked up, failed to hold above, and this is where I put on a pretty nice sized position, which I was stopped out of right here. And I mentioned earlier I had to get off the desk fairly early, so on the second chance, where I'm sure some people looked at it again when it came below 59 again, 59 buyers dropped here, resistance became support, but then it dropped, and it trended down a good amount, all the way down to $58, before eventually reversing back up. So, sometimes first try doesn't work on these. I think this shakeout here and then the hold below the second time was a pretty nice short opportunity, and looking at it here, looks like it was holding a little bit lower at 58.80. I was on the desk for a few minutes at this time right here, and did put on actually a short. I remember I came back on the desk very quickly at this time, and went down to about 58, which was 58 was what I was looking for, a little bit below there. Eventually did reverse all the way back up to the morning resistance before coming lower. But again, not a particularly great stock. There was some opportunity there, but not great. The third stock was NFX. I thought this one was kind of the winner of the day. Third one we talked about, negative reaction to earnings, several downgrades. And I guess it was two things, negative reaction to earnings and the multiple downgrades. I think what maybe made this one of the better stocks we talked about today. I was looking at a short close to 40. What I like to do is short into a little bit of strength when things gap down. So let's take a look at NFX, see what that kind of looks like. Here is the 1 month chart on it. And what you can see is recently had moved higher, and it was gapping below this little mini uptrend that I'm drawing right here. And I was hoping for a move to 39.5 to 40 right on the open, to get a really nice short there. And then you can see the downside here was really 37.50, or what I viewed the downside as. Here's a 10-day. And there was a little bit of a chance in the pre-market to get something off maybe in the 80s, but it was thin. And really, your best trade on this one was after it opened and it consolidated below this 38.50. And lo and behold, this one was a lot cleaner, and this was one where people who traded it tend to make money. Obviously, we're only as good as the stocks we're in. This one had the gap down, had the multiple downgrades, had the opening drive to the downside, and it drove below 39, which was our key support level here. And after it started to consolidate below 38.50, I think this is probably where people looked to trade it on the short side, and then it consolidated at the lows again and had one more move down to 37. Eventually, I think it did go a little bit lower, but let's assume on today's action. This is what we're looking for is right on the first 20 to 30 minutes. We're not looking for trends. We're looking for outlet up and down movement. And so if you catch an opening drive down here, you're probably covering into this. And you're waiting for some sideways consolidation. Here's a 5-minute view. This is what I like to look at for entries. And we can see that this nice consolidation looks like around 38.40. There was some selling here, spikes, never went above 50. This is probably your best opportunity to enter into a stock that proved that it was weak. Of course, we look for confirmation on our radar, another one of our tools. You can see that it finished the day at number 3 on week today, so we know it's in play, bright red. It had pull this over here, it had a 6.1 in terms of in play, number 2 on the list. hard, nice opening drive, consolidating below support level we discussed, moving sideways. This is, that's a trade that you want to put on, and you want to be fairly aggressive once you start to have some sideways movement where you can define your risk. For me, probably in this case, your stop goes above, the ultimate stop probably above 65 cents right here. Maybe you stop at a little bit above 60 as well, and don't give it too much room there. And then ultimately, people who were shorting into this 38.50 area you saw about a 1.5 down move to $37. So that one was pretty good. Why don't we take one more, and I'll just do MGM. Actually, I'm going to do two more, but INTU was pretty good today as well. MGM was one I threw on there for the younger traders. Tighter spread, very liquid. I thought that this might offer them something, and it actually did. And what we were looking at was, I should give you the commentary, right? The commentary was support 13.25, resistance 14 to 14.20, negative reaction to earnings, good stock for younger traders to take a look at, looking at the short side. Okay, so here was yesterday. It was sold off into yesterday. Nice little downtrend. Here's the 15-minute view. In the pre-market, we noticed that this 14.10 it kept on failing at, and there was an opportunity 3 or 4 times for younger guys to kind of risk less than 10 cents. It's kept on spiking up to 14.10 here, and eventually did come off about 45 cents. That's a lot for this stock. It doesn't generally move that much. And that was really the only trade that I just wanted to highlight on that one, which was we kind of had our short zone, which was a failure at 14 or possibly 14.10 or 14.20, and you saw that 14.10 established itself here in the pre-market. On the open, it failed above there as well, and at 10.15, and then consolidated right below there at 11 o'clock. And that trade actually worked, and it never lifted the 14.10 with that nice horizontal consolidation there. And your stop, is probably going to be above the spike high here, probably above 15 cents. So you're probably risking 7-8 cents maybe on that trade. It's for newer traders, a lower risk trade with a lower amount of a stop. And if you make 30-40 cents on that, that's still a what is that? That's still like a 5-6 to 1 risk to reward, so not bad. But then finally, I wanted to talk about this pattern that happened at INTU today. Well, it's a little bit big. 58 support, 60 resistance, positive reaction to earnings, but no volume yet, meaning there was not much volume in the pre-market, which is unusual for a NASDAQ stock. So we wanted to wait for volume to come in. So why don't we take a look at that? And what we can see is the volume did start to come in. And actually, let me do a 1 minute so we can kind of see what it looks like on the market open. The volume starts to come in on the open, and it drives up to 60, and 60 was what we had as our longer-term resistance. So it set up pretty nice technically. I actually wasn't looking at it. I was trading MOS and did a bad job of keeping in touch with this. I should have punched it up at least a couple of times to notice that it had drove up to this bigger, longer-term resistance level we highlighted and was consolidating very tightly against it. And what you can see happened is there was a big spike in volume here when it took out the 60 level and came back, tested it one time very briefly, and then trended up very nicely. So anybody who was watching that at the time, if they played it as a momentum trade, meaning they bought it on the break above 60, they never actually would have been stopped out because it never dropped the level. And then if we look at a 3 minute, let's see how quickly it moved higher. Within 3 minutes, it was up here at 65 cents. And when you have a powerful breakout on that, and look at this increasing volume here, that's something you want to pay attention to. And then it consolidated against the 61 for a while. I know 2 or 3 traders got involved here against the 61. They did spike it down a few times, but it got tighter and tighter. Actually, if we go to the 1 minute, we can kind of see what that looks like. Here, I think, is where people started to look at it into this up move, and it went up $1.30. And I don't know how much people were risking on these buys here in front of 61. I would assume at least to below 90 cents, so maybe 15 cents or so. And $1.30 up move, still well within the 5 to 1 risk reward we looked for. Was nice, and came back down one more time or a couple of times. I actually was bidding down here at a nickel. I didn't get hit. And then later in the day, I wasn't on the desk when it came all the way back down, and my bid wasn't there anymore. But you can see it came almost down to 61 and went up a point. So there was a few times to use that level. Later in the day, I think it did it finally breach it? Yeah, later in the day, it finally breached it. But overall, very strong price action today. If it's consolidating above 61 tomorrow, I'd look to trade this on the long side. And if it gets consolidated above 62, maybe you see some follow through. It's kind of the opposite of what we saw in Walmart today, and that'll be a good segue into our second day plays. And so here we go. Yesterday, WMT was rather weak, and we talked about this as a second day play. Right here, our number one second day play. Yesterday's support level was 59.65, resistance 60.20, very weak. Looking at short close to 60.20 or below yesterday's low, which was 59.65. And so we came into the market open, and you can see I've highlighted that yesterday's kind of support here at 70 cents. Zooming in on today's action, we can see that as the market opened, there was a little above and below yesterday's low right here. Actually drove right up on the open here towards 60. Came back down, and by around 9:40 was consolidating right below the level. I think this is where people started to put on their initial risk who traded on the short side. One trader in particular, I think, was really loaded into this little consolidation. Was lamenting the fact that they didn't hold for the bigger move. And then there was one more chance here. I don't know if this spike up is real. Let me go to a tick chart. And you can see this was actually holding here at 59.50. So again, this is a great example. Second day play. We have the information. Let's zoom out again to the first day. Very weak stock. Had gap down. It's very liquid, so it's a stock we never really have to risk more than 10-15 cents on it. And it was clearly below yesterday's low, which was 59.65. We see a tight consolidation at 55 cents and then at 50. And there was a chance really to put on a large position here with very little risk, and the stock ended up trending down all the way to $59 from here with very little risk. An identifiable seller on the tick chart and was also on the tape. Then we saw the selling again at 59, and I believe some people played into this final down move as well right here at 11:30. And then if we zoom out a little bit, we can see the rest of the day popped back up to 58.80 or so, but never could really hold below there and above there. And so this one seems like it may have some more downside. You can see a nice spike in volume to the close with no up move. And so third day play is just really watching it below today's low, trading it possibly on the short side right here and around 80 cents, and then looking for a third day follow through. 57.60 is the next support level. I think I'm going to call that a wrap, because this is kind of dragging on a little bit for me. And I'll include the PDF file with the game plan information as part of the blog post.